Togo-based Ecobank continues to boost profits for South Africa's fifth largest bank by market value. Nedbank's headline earnings in the year to end December rose 14.5% to 13.5 billion rand. Ecobank contributed a headline profit of 375 million rand from a loss of almost R1 billion in 2017. Arabile Gumede caught up with Nedbank CFO Raisibi Morathi earlier.
The CFO of Nedbank, Raisibi Morathi. Raisibi, thank you so much for coming through as well here this afternoon. A good set of earnings when you consider just what the likes of Ecobank have done. Yes, it's a small part of your business, but it must be good to see it finally turn into a good set of numbers here.
Thanks, Arabile. Thanks for inviting me. And indeed, we're very pleased to share Nedbank's performance for 2018. Indeed, ETI did color part of our performance. And we are very pleased that that comes with a swing in ETI that was making losses in the prior periods to now making profit. So that swing was, in quantum terms, 1.3 billion rands. So we're very, very pleased. And most importantly, you know, the forward look is that ETI is in very complex, difficult markets, and it is continuing to show some turnaround. So this period is cumulatively reflecting 7 quarters of making profits. And we do believe that the worst is behind us.
If then that continues into the following year, does that entice you a little bit more to go into a little bit more expansionary, plans for the rest of Africa?
So we are an African business, and we do believe that our positioning in South Africa, the stronger it is, the better it places us for continue to be competitive in the rest of the continent. We have invested in 6 countries in SADC, where we have subsidiaries. And we have always expressed that we have appetite to increase our footprint, but we're not going to do it in a silly way. So if there are opportunities, of course, we'll continue to look at them. But our approach is that in SADC and East Africa, that is where we're looking to buy businesses that we can be able to control and manage. And whereas in West Africa, we're very comfortable with the relationship that we have, where we have a strategic shareholding in Ecobank.
And what about then locally? I mean, it's been a tough economic environment. Yes, we saw growth of 0.8% now, which is possibly a good set of news then for 2018, better than expected. How has that impacted your business, though, particularly over the long run, where we've seen economic growth falter in the country?
So very pleased indeed with the news about the GDP, particularly because we really started with a very tough 6 months where we had a technical recession. So the confidence that comes with an improving GDP should assist our clients in terms of being able to have more confidence in the long-term spending patterns. And we do hope that 2019 should be a better year in terms of economic growth. Our in-house view is that economic growth in 2019 should be around 1.3%. With that means people are taking a little bit more loans, people are transacting a little bit better, and that should be good for business. So locally, I think we still have some challenges in terms of policy certainty that is required, and the elections are also, partly making that policy certainty to be somewhat delayed. But we do hope that the election outcome will provide a government that is able to deal with some of the challenges that we have faced as society, and most importantly, the progression of some of the things that we have seen starting to turn around. I think, as you would have seen, that with the change in the political landscape, where we believe that we're still in early stages, but as an example, the renewable energy transactions that had stalled for about 3 years, we saw them coming through, and part of our very strong in our NIR at 7.9% is through participation in those type of transactions. So we do hope that the 2019 period will unearth more opportunities for us to continue to service our clients.
How do you strategically place yourselves then in areas that will boost that growth projection? I mean, at this point in time, a lot of people have decided to try and be leaner, be meaner, perhaps to try and take advantage of any small win. How have you guys placed yourself as well?
Indeed, clients have continued to be leaner and meaner, which is a good thing, because when things are tough, you'd much rather people take that type of an approach. But we have also recognized that, we are in a digital age. The 4th industrial revolution brings with it great opportunities for clients to be able to access products that they previously haven't been able to. So we talk a lot about our investment in technology. We have spent somewhat around 2.3 billion in 2018. slightly bigger amount than that in 2019. And this is really changing the manner in which we service clients. We want to be more digital. We want our clients to be more digital with our mobile apps, where we have seen close to 2 million downloads of our mobile app. We want clients to use more and more of that. So currently we have at least 80 services that the clients can be able to self-service from the mobile app. And we expect that to continue to build up to 180 by 2020. So that is really exciting for our clients. It makes banking easy and cheaper for them, and it also connects us a lot more. So look out into the space. In 2019, we're going to be launching a lot more products that will excite our clients, and the most significant of which is the onboarding process. We want to make it much simpler and easier and cheaper for our clients, and followed by the loyalty program that is going to come enhanced.
Yeah, has that been one of the key elements to the business now, considering that lending has to sort of stifle a bit considering the state of the economy? So you had to find things like programs, things like ensuring that the app works really well for consumers to get as much benefit out of the bank.
So, Arabile, the lending, whilst it is one of the areas where clients pull back when things are tough, but interestingly, we've seen very good lending in 2018 in our retail portfolios. So we saw applications increasing, and the payouts also continue to increase. So we paid out 180 billion rands in 2018 to our various clients, seeing growth across all the different product segments. Where we were slow actually is in the corporate side. And this is where in the first half of the year, a lot of clients settled facilities when they were sitting with a bit of cash, and it really was a confidence factor. So the whole thing around digital and mobile apps, etc., that is a way of being able to get transactional activity with clients, because we know that day in and day out, you and I need a bank account, and we need to transact, etc. And that is just bring convenience in the manner in which clients are transacting. So economy, tough or not, that is something that we were always going to do. And we actually have spent close to 8 billion rands between 2012 and 2018. And we expect that we'll still continue to spend somewhere in the region of around 5 billion rands, continue to invest in technology that is relevant for the industrial revolution we are in.
Certainly a very important investment there, Raisibi. Really, really appreciate your time. All the best with the new year as well, and hopefully we can continue to have the conversation and see how the market performs as well at that point.
Thank you very much, Arabile.
Raisibi Morathi, the CFO of Nedbank, they're discussing the company's earnings. Of course, a wonderful year where we saw even the likes of the rest of Africa do pretty well, for the bank included. We'll continue to catch up with how markets proceed and how markets catch up to news like this, a whole lot more.